Okay, folks, welcome to Swing Trading Today. This is Bob Desmond at the Contrarian Trader, and it is December the 27th, 2018. I hope everybody had a great Christmas, and we are looking forward to a very happy 2019, and we wish the best to you and your family as well. So what we're going to do today is we're going to go over the pre-market activity, and there is a lot of it. Then we're going to segue over and into our members stock chart request, which is where we review the symbols that are trending in our forum and that our members submitted for me to review on video. But before we get into the pre-market activity, where we saw a surge in the markets yesterday, let me first play for you a clip of the guidance I provided members on the week ahead commentary as we proceeded into the new trading week. It's exactly the reason why you must learn how to trade the charts and not listen to the hype that's being posted on CNBC. Trading down below the third standard deviation Bollinger Band, we're going to pop here soon. Volume very high, but a lot of panic selling last week. Daily chart, very oversold here. RSI 24.63. Can we go lower? Sure. Big volume. The NASDAQ composite, we are now in bear market territory. We closed right at support. Let's update this. Actually, we closed slightly below it. So the next price target would be down here at 6,200. What a disaster area. Big volume. Let's go to a daily chart. No real bounce on Friday. We closed just off the lows of the session. It looks as though we may go lower here. The S&P 500 weekly chart nearing support at 2,400. Daily chart, we're just off of support here. I think we're going to bottom at around 2,400 and then rally this week or next. Probably this week. The IWM weekly chart, we're now long of the IWM. Now, I mentioned that the bottom for the NASDAQ composite, at least in the short term, would be at the 6,200 level. We saw a low of the week at 6,190. So a pretty good call on our part, in essence, a rounding error, as we identified that we were oversold on the markets, but that we could head lower. What was the probable support level? At or around the 6,200 level. I also mentioned on the S&P 500 that we would see a bottom at or around the 2,400 level. We did overshoot to the downside, and what happened on Monday? We opened up at 2,400 on the S&P 500. Yes, we did overshoot to the downside, but we have since rebounded with a bullish key reversal on the week. So thus far this week, we've been pretty accurate in our calls for a rally in the markets. The term I have been using on our commentary is expect a rip your face off rally, a short covering rally, which is what we saw yesterday. We also leverage the charts, as you should be doing as well, to identify where there are reinforcements if you are planning on buying the market. You want to buy at support levels where you know you have like-minded buyers waiting to help support your investment or trade decision. Now let's segue over and into the pre-market activity. We're going to kick things off with the NASDAQ composite, which had a huge day yesterday, but we are pulling back this morning and we are weakening up here. At current, we are at the lows of the morning session. I think that what's going to happen here is we're going to retest, which we're not far from right now, any minute. We're going to retest the breakout point, and what we'll look for are buyers to step in and help defend this current support level, which was resistance. So we're going to edit this now. We're going to turn this red because we do not want to see the NASDAQ close this 4-hour bar down below this lower band of support. And you can see that we just opened up a 5 a.m. bar. We're holding thus far. We have another 4 hours to go to see whether or not we will hold support. And in the end, we did ultimately hit the lower band of support. Taking a look at the S&P 500, very similar price action as to what we are seeing on the NASDAQ. A big up day yesterday. We are now giving back some of those gains. No shock here. We left the day yesterday, intraday, pretty overbought. So for us not to expect a pullback would be a bit short-sighted. I think that this may be a buying opportunity, assuming that we hold this lower band of support, which is now in red. And as we saw with the NASDAQ, we've opened up a new 4-hour bar at 5 a.m. Eastern Standard Time. We are now holding support. The question is, do we close there? Or do we fail and break down below this lower band of support? That would not be good. At current, I'm viewing this as a sharp pullback and a retest of a breakout point. It's as simple as that. Let's not read into it, unless, of course, we break that support level. Let's check out the US dollar. The dollar has been very, very volatile. When we closed out the day yesterday, we had broken out and above this upper band of resistance. We overnight have broken back down below that support level. So yet again, we are seeing a breakout point failure on the US dollar. We saw it back here, failure. We had broken out, rolled over. We saw it here, broke out, rolled over. This is going to crush confidence in the US dollar. Why am I happy about it? We are long of the gold miners, and we are looking to add. So gold showing a bit of strength this morning on the heels of a weaker US dollar. Let's take a look at silver, of which we are also long of, and we're looking to add more. Silver had a huge day yesterday. It outperformed gold. We have a bull flag set up on this 4-hour chart, and it looks like we may get a continuation breakout, especially if the dollar continues to weaken. Let's take a look at the 30-year bond price, which had given up some ground yesterday. We saw a rally in yields, and we are beginning to see renewed strength on the 30-year bond price. Now, what we don't want to see is a break below this support level on the 30-year bond price, because that means yields are ripping higher. I am not loving RSI here. We're seeing lower highs and lower lows, while on price, what we're seeing was an intraday high on the 25th, yet RSI has been putting in lower highs and again lower lows. That's a divergence. We have not been putting in lower highs and lower lows. We put in a lower closing high on the 25th, but no lower lows. So just be careful here with the 30-year bond price. I'm a bit concerned because RSI is sending us signals. Now, if we break out and above this upper band of resistance here on RSI in green, okay, you know, that means that we'll probably get a continuation breakout on the 30-year bond price, and my worry was in vain, but that's my job, to worry. So we're looking for a breakout here on RSI to help confirm a breakout on the 30-year bond price. If we get that, that means yields are pulling back, and that should put a bid under stocks, which again are weak this morning. Now let's segue over and into stock chart requests, which is where I review the symbols that are trending in our forum and those symbols that our members requested that I review on video. This was recorded Wednesday evening. Hey folks, thanks so much for watching, and we're going to begin again in just a moment. But first, I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this: I am going to be raffling off a 1-year gold level membership to the Contrarian Trader. That's right, trade alerts, daily commentary, paper trading simulator, access to the members forum, and I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait. Enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. So let's begin with SPXL. A lot of conversation in the forum with regard to it. And this is just a leveraged ETF on the S&P 500. A big day on Wednesday, up nearly 14.5% on the day. I think we could head higher. We'll probably get a pullback. I think that on that pullback prior to making a new daily high, I think you could buy it. Volume was very high. Now, this is a 2-hour chart. What we're going to look for here is the ability for the SPXL to rally up and through the 20-period moving average, which is in dotted green. You can see that in the past, it's acted as a declining ceiling. So how do we get through it and hold it? we really need to pull back, put in a higher low, and then begin to break out. That will cause the shorts to cover yet again. Because all of a sudden you're getting higher lows and now higher highs, and that will send the shorts running for cover. At the time of this taping, all we have is a rally, a short covering rally off the lows of the 26th. So the market really hasn't shown us a bottom yet. You'll know a bottom when we get pullbacks, higher lows, and then higher highs. Now in this updated version of the 2-hour chart, if we rally up and through $34 per share and we consolidate along this dotted blue line and ideally above it, that would be very attractive because this upper band of resistance has marked a downtrend for all of December. So again, our primary target to get through is the 20-period moving average, and then of course a breakout in the close above this upper band of resistance in blue. Another symbol mentioned in the forum is URA. This is the Global Uranium Fund. This is for fellow member Tom. Weekly chart. I think that we have the makings for a potential rally here, but we need to close above 1150 per share by the end of the week. We closed out the day on Wednesday above 1156, but do we close there on Friday? That's critical because this is significant resistance. It was support back here in November of 17. Prior to that, in November of 16, it was resistance. Prior to that, in September, it was support. Way back in August of 15, it was support. So this is critical for us to close above on a weekly basis. If it cannot do that, I would avoid the shares like the plague. Daily chart, a nice bullish reversal day on very, very good volume. So we had some institutional accumulation. So I'm not going to be the least bit surprised to see a continuation rally. That sets the stage for a weekly close above 1150 per share. I would then become far more bullish than what I am right now. Platinum Metals Group weekly chart. We broke down last week below key support. We attempted a breakout. That breakout failed. So I would have to say avoid these shares. Now, if we manage to recapture this prior support level, then we'll revisit it. But until then, I think it's dead money. Daily chart. A nice reversal day today, but a lot of overhead supply at $1.40 per share. I would avoid these shares. I don't see anything attractive about them. Lululemon, daily chart. A beautiful rally on Wednesday. The key for this stock is to get a close above 123 per share. That's where the rising 200-period moving average is. And I think we could quite very well get there. We have RSI, which is breaking out. We have a higher low. We have Stokes with a higher low. No breakout yet, but they are hooking up. Volume on Wednesday was very, very poor. So this is a warning flag. We're really going to need to see volume pick up to get through this resistance. So Lululemon's a potential buy on a close above 123 per share on volume. NVDA, a bullish key reversal on the day. I think we could easily rally up to this upper band of resistance. RSI, no breakout yet. Stokes are beginning to hook up. I'd be a buyer on a close above this upper band of resistance at around 135 per share. Volume was okay, but not great. I mean, we closed up about 4.75% on the day, and volume just barely beat the 3-month moving average. Not all that sexy. Let's check out the weekly chart, see where we have resistance above on a weekly view. All right, so we're right at it. And this is why you didn't see volume today. We're right at resistance. So if we manage to close above, say 132 per share, I would get a lot more bullish about NVIDIA. I still may wait for the breakout above the 135 level, which is daily resistance, but a recapture of the support level here would be very, very bullish to me because it was real good support back here in November. It was a resistance level in May of 17 and then support later in May of 17. So we have some history at this support level. So NVIDIA looking interesting. Shopify daily chart up 9.33% on the day. Volume was horrible. And we have a lot of resistance above. So let's go to the weekly chart to filter out the noise of a daily chart. We are right at resistance at 130 per share. We need to close at around 131 per share for me to get bullish on Shopify. We're very close. Volume does need to pick up, but Shopify is looking good. I was bullish on the shares a few weeks ago. It never panned out. So let's see how we close out the week. I'm not ready to buy these shares yet, but perhaps fairly soon. Micron Technology's weekly chart, a bullish key reversal so far on the week, and we bounced off of historical support. This is really attractive stuff. You can see this was rock solid resistance and later support back in 2017. And you have a lot of history back here as well, from 14 into 15. Daily chart, bullish key reversal day. How is our volume? Pretty good. So I think we're going to get higher highs here, probably up to $34 per share before you see the sellers move in on Micron. AMD, weekly chart. We have a breakout on a weekly basis here, assuming that we close here, right? But we're not going to know until late in the afternoon on Friday if we're going to close there. We may just sell off. So don't go basing your trade decisions on a weekly chart until it appears poised to close above resistance. Daily chart. Bullish key reversal on the day. We have resistance right at $19 per share, and we have two critical moving averages to contend with. One is the 200-period moving average. Two is the 50-period moving average, which is declining. Volume was not great. So right now, I would not be a buyer of the shares. I need to see how we close out the week because my trade here is not a short-term one, because the short-term trade, what are you going to do, scalp a buck on a short-term swing trade between where we close today and $19 per share? That's not my style of trading. I would rather wait for a weekly breakout and then begin to build a position, assuming that the market doesn't begin to roll over. The next chart up, LABU. This is a leveraged ETF, not for the faint of heart. We were up 22.13% on Wednesday. Can we head higher? Absolutely. Are we out of the woods, and should this become a position in your investment portfolio for the long term? Not quite yet. We're above 30, which is attractive. We need to close above 30. If we fail, you're going to see more pressure here. So again, I'm really waiting to see how we close out the week. Do we close at the highs of the week, or do we sell off? And in this market environment, folks, I know that it's very, very easy to believe that on a day where the Dow rallied over 1,000 points that the bear market is over. It's not. There has been a lot of technical damage done. So this counter trend rally was no shock. It was expected. And we were positioned properly for it. The last chart up, DIG, which is the ProShares Ultra Oil and Gas. Talk about significant technical damage being done here. Horrible. But we're having a great week so far. We're back above critical support at 22.50. If we close there, I think it's a buy. But if we close down below 22.50, you need to avoid these shares because we're probably going lower. We have not yet seen the bottom. However, I like the reversal week thus far. Maybe it is the bottom. We won't know until Friday afternoon, at least for a short-term swing trade. Let's check out the daily chart. All right, so the daily chart was very, very oversold. We were due for a bounce. Look at this volume. Beautiful volume. So my theme with most of these stocks is that I'm waiting to see how we close out the week on Friday. We may be doing some buying on Friday if it appears as though we are closing out the week strong. Now, we went into the trading day on Wednesday long of stocks. We were buying when there was blood in the streets, when nobody else wanted to buy stocks. They were getting margin calls, panicking. We were buying, and it paid off. So I'm not, after this big rally, I'm not looking to go chasing stocks right here, right now. I'm actually looking to sell them. Then I'll look for a pullback, which is inevitable. We will get the pullback. Ideally, a higher low. Then we could buy a breakout if it comes. If we get a breakdown to new lower lows, then of course we'll look to the short side of the market. And that is it for today, folks. Everybody have a profitable trading day, and I'll talk to you soon. Hey folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our 1-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. Let's get back to my commentary. And if you have any questions, leave a comment below.